this week's market update, central bank policy remains front and centre of market attention, UK inflation numbers, and a barrage of economic data out from the east. After last week's focus on monetary policy with Fed Chair Janet Yellen's testimony to Congress and the first Bank of Canada rate hike in 7 years, central bank policy is once again expected to be in the spotlight this week. The European Central Bank meets on Thursday, and while no outright change is expected, we could see another very gradual step towards normalization, with a change to its guidance on quantitative easing. The Bank of Japan will also announce its latest policy decision on Thursday morning. Again, no change expected, with the bank cautious of making any announcements that could derail the economy or hurt consumers, given that lenders in the country are already tightening credit criteria and restricting loans. Of keen interest, however, will be the bank's quarterly update to its economic forecast, with expectations that it will upgrade its assessment of the economy with stronger data in recent weeks and a weakening of the yen, which of course helps Japan's export-driven economy. In Britain, June's inflation numbers will be closely watched by both cash-strapped consumers and rate setters at the Bank of England, given the sharp rise in CPI inflation over the last year, from 0.7% in May 2016 to 2.9% a year later. The Monetary Policy Committee does not meet again until the 3rd of August, but this week's inflation numbers may give an indication as to whether concerns will intensify over inflation overshooting and how gilt markets might react. Back in June, gilt investors sold bonds after 3 members of the bank's Monetary Policy Committee voted for a rate hike. The yield on the UK 10-year benchmark has been rising steadily ever since, with the fixed income market pricing in at least one interest rate hike over the next year. Expectations are for CPI inflation to ease back slightly, although the consensus view is that inflation has not yet plateaued, and expectations are for inflation to pass the 3% mark later this year. But there are those, which include the National Institute of Economic and Social Research, who expect inflation to rise even further, possibly reaching 4% this year. Now, wage growth figures out last week, which showed regular pay growing at just 2%, confirmed that pay growth is not keeping pace with rising prices, despite the UK's unemployment rate reaching its lowest level since 1975. On Thursday, retail sales figures will provide the latest health check on how spending is faring given the cash squeeze on consumers. However, given the ongoing uncertainty over the UK's economic prospects, it's difficult to see any rapid rise in interest rates, which will only put more pressure on the consumer. Brexit negotiations continue to cast a long shadow, as officials kicked off a second formal round of negotiations this week, with UK Minister David Davis and European Chief Negotiator Michel Barnier resuming official talks in Brussels. Back on home soil, UK political infighting over differing approaches to the talks continue, with cabinet ministers seeming to be jockeying for position in anticipation of a possible Tory leadership contest in the autumn. Likewise, in the US, politics also remains at the forefront, with President Donald Trump suffering a stinging defeat on Monday night as Republicans abandoned their efforts to replace Obamacare, turning instead to a very high-risk strategy of trying to scrap the system without having any alternative ready. Over in the East, data released this week in mainland China showed that Chinese growth remained relatively steady at 6.9%, which suggests that China's economy is on target to hit the government's goal of 6.5% growth this year. Meanwhile, in India, a member of the country's poorest and most oppressed caste is expected to be elected president. Nath Kovind, a lawyer-turned-politician with the ruling BJP, was nominated for the job by the Modi government last month, and is essentially running unopposed as opposition parties haven't put any candidate up as an alternative. In India, the president is elected by members of parliament and state-level lawmakers rather than directly through a popular vote. While this is largely a ceremonial position, the president can play an important role in the case of constitutional or political crises. On the companies front, this week sees trading statements from Royal Mail, Experian, and a production update from BHP Billiton. Royal Mail faces a strike action as talks with unions stall over new pension proposals to replace its final salary pension schemes, which are due to close in 2018. Interim results from Unilever on Thursday will also be closely watched after a failed bid from Kraft Heinz, poor first quarter results, and sales growth warnings from other consumer staple giants, including the likes of Reckitt Benckiser. Unilever is understood to be among a handful of companies competing to buy Reckitt Benckiser's food business. Also in the spotlight this week will be full-year results from Sports Direct and trading updates from Anglo American and EasyJet. The discount airliner's boss, Carolyn McCall, who has headed up the company since 2010, has also been named the new head of ITV, kicking off the search for a new chief executive. On Wall Street, video-on-demand platform Netflix saw its shares jump almost 10% after it reported much higher subscriber growth in its recent quarter. The company has been investing in original content as it continues the drive to upend traditional TV network programming. Earlier this week, Netflix broke through the symbolic barrier of 100 million global subscribers. It now has more subscribers worldwide than in its home market, the US. Meanwhile, Goldman Sachs, Bank of America and Morgan Stanley are expected to report mixed fortunes in their second quarter results out this week, following on from JP Morgan, Wells Fargo and Citigroup reporting last Friday. Shares in all 6 of the US banks fell at the end of last week, despite the trio beating expectations. Finally, UK banks rewarded income investors with £33.3 billion of dividend payments in the second quarter of 2017. That's an increase of 14.5% from the previous year, according to data from Capita Asset Services. Part of this windfall is down to the weak pound, which has helped British exporters and boosted those companies that pay their dividends in other currencies. Special payouts of £4.6 billion, the second highest on record for any quarter, has also played a part. This included a £3.2 billion payout from National Grid on the sale of the stake in its UK gas distribution business, while Lloyds Banking Group paid £357 million last quarter as a special dividend on top of its £1.2 billion regular dividend. Looking at sectors, dividend growth was particularly strong in the mining industry, where total dividends from resource and commodities companies was 73% higher than last year. Every company in the mining sector raised its dividend this year, with large payouts from Glencore and Rio Tinto making up a large proportion of the total.